This is a conventional refinance. That is going to be a break even. Another term for break even would be rate and term. So we're going to go here to refi and then conventional, and we're going to choose break even. The other choices we have are cashback maximum, or for a better term, I know my loan amount. So we're going to do break even. What I'm looking for in the loan to value is the most you would be allowed to have. Not what you think it might be, not a guesstimate, but the absolute most that you would be allowed to have. So let's say that right now we're doing break evens at 80% loan to value. Say the appraised value is $700,000. Enter, enter. These people want to take advantage of the lower interest rate right now, and they didn't do what many people did, which was to refi their equity. So now they have equity in this property. So their appraised value is $700,000, and they only owe $450,000. But their interest rate is at 7%. So now would be a real good time for them to take advantage of that. Again, these numbers may not make sense in today's real world, but it will give you the general idea of how the program works. Okay, so it's a fixed rate, and they're going to be able to get 5.25. Again, I'm making up these interest rates. I don't know what interest rate these people would be able to get. This is just an example to show how the program works. Interest only, no. Okay, now I'm showing a $560,000 first. Well, if we look at the $450,000 and figure $10,000 in closing costs, we're only looking at a $460,000. So you're thinking $560,000 is way more than I need. But $560,000 is 80% loan to value. So you're going to trust me and you're going to go with this. So $560,000, there's no PMI financed. Here's your payment. Property insurance, let's say, is $60, and property tax is $250. There's no mortgage insurance. We'll enter, enter, enter. And on the refi, the best thing is to enter, 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 enter. Not tab, but enter. Okay, so we have 1 point origination, no discount. There's the appraisal. Let's say underwriting $595, processing and docs $450. And again, I'm making up these numbers. You put in what your actual numbers are. 30 days of interest, 6 months taxes, 14 months insurance, and now they may not have any impounds because we have plenty of loan to value here. So you could zero out the taxes and insurance. I'm going to leave them in. There's your escrow fee. Now, if you want to know, remember we had that $560 was the loan amount? That means that this origination fee should be more like $5,600. And as you can see, I've already started to adjust the loan amount down to what you actually will need. So let's keep going over here. I'm just going to put 15 days of interest owed. $150 for notary. No inspection. A couple hundred for miscellaneous. I want to calculate the APR. And what I've given you is exactly what you need. $464,950 because we have $14,945 in costs, bringing our net refi to within $50 plus or minus. So this came out perfect. But again, trust me on the loan to value. Don't try to guesstimate a loan to value. Put in here the most you would be allowed to have, and I will give you just what you need. From here you can go to print, or you can go to charts and good faith estimate, fill in your information, and you get your good faith estimate. I'm going to save that as a PDF file. Make that conventional pre-qual. Break even. Okay, I'm also going to make the printout for the usual way. Style number 7, you can print in English or in Spanish.